Every now and then, I have a trade that ends up in a good profit, but still, I'm not entirely happy with it. Travere Therapeutics, ticker TGTX, is one of these trades. On the 6th of September 2024, the FDA approved the biotech company's kidney drug. As a result, the stock gapped up over a 1-year base and set the stage for an EP trade. I played this trade and banked $2,865 in profit over a 20-day period. My return was a little over 3R, meaning that for every dollar risked, I made $3 back. Allow me to talk you through this trade and explain to you why I look back at this trade with some regret. Before we get into the setup, it's important to know at least some of the fundamentals of the company. First and foremost, Travere Therapeutics is a biotech stock, and if you studied the way biotech stocks move, you'll know that they can be quite volatile and risky. Many biotech companies don't make any money, and many more don't even turn a profit. However, that doesn't really matter because what's more important is the potential of their drugs. They live and die by this. So not only do you have to know the company's earnings dates, but you also have to pay attention to their drug approval dates. Surprises can catch you off guard in both directions, and it's because of this added risk, many traders prefer not to trade biotechs altogether. But since they make some of the best moves, I'll still choose to trade them. Adding to the mix is the fact that TGTX is a small cap company with a float size of around 76 million shares, and it had a cost of only around $10 per share. Throw in a strong catalyst and you have all the ingredients needed for a stock to make a big move. Now let me show you my entry. So on the morning of Friday 6 September 2024, there was news that the FDA gave full approval of TGTX's kidney disease drug, Filspari. This made the stock gap up between 6 to 9% in the pre-market, which wasn't massive, especially considering that some biotechs can gap up like crazy. But it was enough to clear all previous resistance within the past year. Now, I don't even consider trading stocks which haven't cleared at least 6 months worth of resistance. As far as my trading goes, the less resistance there is, the better. I added TGTX to my watch list for a potential entry when the market opens. And I'm looking for relative volume to be over 400% at the bare minimum. And I also want the range of the first 5-minute candle to not be overextended. So as the market opens, I'll wait for the first 5-minute candle to be established. This sets the range and determines where my entry and stop loss will be. Once that first candle is established, my entry will be the breakout of the high of that candle, and my stop loss will be at the low of the day as always. If the range of the first 5-minute candle is too wide, then I'll pass on the trade, no questions asked. Fortunately, RVOL was above 1000% when the stock opened, and it was only increasing minute by minute. The spread was fluctuating between 5 cents to 7 cents, which was a little higher than I liked it to be, but still under 1% of the stock price. Now the first candle, it closes strong and it's not too wide, so I anticipate the break of its high. My plan is to enter at $11.20, which still presents a good risk to reward. The price popped up quickly, and when I pulled the trigger, I ended up with 1,333 shares at an average price of $11.22 per share. I instantly put my stop loss at the low of the day at $10.52 and sat back and allowed the stock to run its course. My first target is set at 2R or 2x my risk, where my plan was to sell 35% of my position if it reached the target, of course. So let's see what happened after I entered the trade. As you can see, the stock shoots up almost immediately after my entry. On this little rally, I'm up around 1R, and typically when price runs up 1R, I would move my stop loss to break even. However, I decided to give this a bit more breathing space, so instead I held my stop loss where it was. By the end of the day, I'm in the red. I'm down, but not by much, maybe a few $100s. Now when I'm in this situation, I would usually just sell my position and just take the small loss. but I wanted to give this stock the benefit of the doubt, so I decided to hold it overnight to see if it can make a recovery the next day. And it does. The next day the stock gaps up and rallies around 14%, allowing me to take a partial profit. I sell 35% of my position and move my stop loss to break even. The stock ends up closing near its high of the day, which I always like to see. This trade is pretty much risk-free now. All I'm doing at this point is waiting for a higher low to be made on the daily chart so I can move my stop loss up. The stock pulls back over the next few days on low volume, which is a positive sign that it will make another leg higher and continue its uptrend. What you don't really want to see is a pullback on high volume, which indicates that there's a lot of selling taking place. Some selling is expected, but a lot of selling suggests that institutions are unloading their shares and it will take a lot more buying power to push the stock back up. Anyway, TGTX makes a higher low and I move my stop loss to just below it. Now I'm just waiting to see how the stock plays out. Either it makes another higher low, makes an overextended run, or sells off and stops me out. Over the next couple of weeks, the stock continues up without a pullback, so I gradually move my stop loss up, and this is where I mess up. On this leg up, there's no clear pullback or overextended run, so I shouldn't have been moving my stop loss up. However, I see how much profit I'm in, and I don't want to give back much of my gains. So I use this consolidation area as a support level and justify to myself that this should be the higher low, despite the lack of confirmation. You'll see what happens next. On the 26th September, so 20 days after my entry, it's just another day of consolidation. I'm still anticipating a breakout to the upside, which will 100% confirm that this support level is indeed the higher low. Nothing happens during market hours, but shortly after the market closed, I noticed a big dip and I was thinking that's unusual. So I checked the news and it turned out that Travere Therapeutics announced a decision to pull some drug enrollment which would save them $30 million in R&D. Now I didn't really know what to make of the news and considered selling half of my remaining position. However, I didn't like seeing the dips and decided to sell my entire position around where my stop loss was. I was thinking that a big gap down was possible, especially given how toppy the general market looked. So that was it. I was completely out of the trade for a profit of $2,865, which was a 3R return. The trade was over, but the emotions of it weren't. The next day, out of curiosity, I checked the stock to see the aftermath. It did what I thought it would do, gap down, but it wasn't anything serious, though it would have taken out my stop loss anyway. I almost forgot about the stock, but I still have to have it on one of my watch lists, so I'm still aware of what's happening with it. So over the following few days, TGTX pulled back to the 20 EMA, and I'm thinking that the price action still looks good. It never even closes below the 20 EMA. Then, out of nowhere, it just explodes to the upside and makes new highs. This was the higher low I should have waited for, but fear and a lack of patience got the better of me. The stock doesn't break my sell rules until the 15th November, where it closes below the 20 EMA. Had I played this the way I should have played it, I'd be walking away with a 7 to 8R return instead of 3R. That is a massive difference. The same thing happened with my recent trade on Reddit, where I placed my stop loss too tight, but I'll cover that trade another time. So the big lesson for me here is to give my trades enough breathing space and stick to my sell rules. Don't anticipate things happening, but instead wait for confirmation. These are things I already know, but my emotions took over and I bottled it. Of course, if you're not really a home run trader, i.e. you sell your entire position at a specific price target rather than letting it run, then these rules won't apply to you. However, if your plan is to go for glory and capture the big moves, then pullbacks and giving back profits are to be expected. So from now on, I'll try my best to stick to my guns. If you learned something from this video, just give it a like, and if you're after more swing trading tips, then just subscribe to my channel. Thanks for watching, and I'll see you in the next video.